The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach we go, dear friends. And as we start off the trading hour, we're at 2089, which is off just 2 points on the S&P. Cash volume has been tepid compared to the last 3 days, 2.35 billion shares. And the market's trying to forget last night and some of this morning, but certainly a down tone to the market. Doesn't really matter, at least for the moment. Everybody's wondering how they can buy whatever is on sale today. It is a mania to believe that the Fed will throw gasoline on whatever fire goes out. Eventually, you get the law of diminishing returns, and I suspect that's what we're into now. Although this little pullback I like, because all we need to do is kind of go up, get back through kind of that right shoulder of a 9-day moving average or a 3x3, and we're going to have a fairly beautiful, spectacular-looking double repo pattern on most of the market. So I could see, a couple more days up. We don't have to go higher than the high. We just have to kind of meander a little bit higher and then fail and have a right shoulder that heads straight down like an arm to the hand if all this is correct. Of course, we have a lot of earnings out after the bell last night and today and this morning. We'll talk about those. And, of course, every day we meet at this time. Every trading day. So we'll have to look at that. In the meantime, it's a time to get this party started, and it's always with a little bit of history. The Dow Jones Industrial Average today in 1970 dropped 1.3% to 762, and H. Ross Perot suffers the worst one-day personal investment loss then on record. His electronic data system drops from roughly $150 a share to around $80 in chaotic over-the-counter trading. It was not a listed stock at the time, but that's it. We'll continue working on everything else. What else is going on? Over the counter, no. That's kind of the important part there. Market guru Joe Granville signals his $1,500 premium subscribers to buy stocks this day in 1980. The next day, the Dow Jones Industrial Average surges 4% to close at 789. But that is pretty much it. He calls a bear move after that, and then for the next 17 or 16 years is consistently totally wrong. In fact, some of the people that watched his newsletter kept it. Mark Hobart went through all of them and calculated that Granville followers lost 98% of all their money following his market calls between 1980 and 1987. He continued to write newsletters into 2000, but this is one of these kind of markets where you can become famous. They will have you on CNBC. All you have to do is be very much, just once, be right, and then they will follow you forever. Get a name in this market. Most people do not know I grew up in the same town that Mr. Granville lived in. He came into my store to buy a computer one day. I kind of vaguely knew what he was at the time. After I got more invested in investing in the mid-'90s to late 90s, found out more about him. He was quite the showman. He had built just a quarter inch under the level of the pool a giant lucite, 1 inch lucite platform, so he could walk across water when people would visit him at his house in the summertime and act like Jesus. He was more of a showman and even on the verge of probably being not anywhere close to being truthful about some of the things. But just to let you know that the money monster of his time of the 80s was Joe Granville. Yeah. And other things going on here today in Mr. Market. That is the first tech IPO of the year is a spinoff from Dell. It's Dell Securities spinoff. SecureWorks had to be moved down from the $15.50 to $17.50 range to $14. Even then, they had to drop the amount of shares going out. The pricing involved 8 million shares, fewer than the 9 million originally targeted. But guess what? They put some lipstick on this pig and got it out the door. Maybe they heard that one there, but hard to tell. Yeah, it's all set. It says save savings. Hopefully they did hear that clip, but we shall continue on. Well, let's do this. Let's turn that up. Did you hear that clip? You did not hear that clip. For some reason, nothing is working today. Is the Index 100 in a double repo confirmation with today's move? I do not suspect so, but I will look at the when we get done with snooze, I will look at that first. Microsoft and Google, buried in the earnings call last night, was a bit of interesting discussion. Basically, the Hatfields and McCoys, set up as Microsoft and Google, have been going at each other using the government as a bludgeon. And of course, always accusing each other of doing all kinds of nefarious things. Both of them in the releases last night for the earnings had dueling press releases that said, basically, we're not going to do it anymore. And I just thought it was kind of interesting, a kind of an end to hostility between Microsoft and Google when both of them were being rather treated hostilely in the market themselves. What else is out here? It was kind of interesting. We will continue to focus on competing vigorously for business for customers. Anytime you hear vigorously or you hear robustly, it generally means that some lawyer was what can you say, molesting the copy before it went out the door. And I continue to think that's all it was, but at least they're not going to be suing each other, and maybe they'll actually work harder at getting earnings. When we come back, we'll talk about Apple, and we'll try to figure out what's going on over there. But I have I told you thusly coming up with Apple.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, we'll continue on here, and it's kind of everything's kind of acting a little weird here for me today, so we'll find out what's working on. Anyway, as I said many times, I informed you thusly that China was where American money goes to die. And once again, we see a big company go into China and basically get kicked out by the Chinese communists who run the country. And why they are capitalists, they are Chinese first, and that continues to be a issue. But I will walk through this once again. China, from the very beginning, when you are in the first grade of Chinese school, starts with some indoctrination, and that is a policy they call One China. China has been here forever. It's been here for 3,000 years. China will be here 3,000 years from now. We are the chosen people. We are Chinese. It is the job of every Chinese citizen to make sure that we are, of course, the dominant people in the world. And people around the United States use racism extremely lightly compared to what is blatant racism in China. And I think people just keep missing a great deal of that. If you've ever been there like I have, they pretty much think everybody is truly inferior to them, whether they are or not. I heard a great saying yesterday, Americans improvise, Chinese steal, and Europe sues. And that's kind of the way it goes. But they are more than willing to kick anybody out that competes with somebody, and that's in this case exactly what happened. The State Administration of Press, Publication, Radio, and Film has banned the company's iBook store and iTunes movie service as part of a strict crackdown on online services owned by foreign companies, because guess what? sons, daughters, uncles, cousins in that company, in that country already own it. I think Alibaba's into it. There are a lot of companies inside. So when you hear a lot of political rhetoric about fair trade, especially with China, they are the poster child for doing one thing and saying another. And eventually, it's like a lot of people that raise kids. Eventually, the kids just wear them down and they quit. And for a great deal of what's happening, that's it. China just says one thing, does the other. Maybe you take them to world court or something, and in 5 years, maybe you got an answer. And the next day, they're lying to you all over about something else. There is no free trade there. And my point isn't that, that there's this inadequacy. It is the constant drumbeat that just if we could get into China, there will be a bunch of money there. And my answer is, if there's a bunch of money there, guess what? China will take it. You've got to go in there and kind of act poor all the time. If you start talking about selling lots of cars or doing something else, guess what? You are going to find a couple of your CEOs or maybe a couple of the people that run the division there, maybe in jail on trumped-up charges. They will talk about letting them out, but maybe you've got to give a little bit more taxes. Basically, it is the mob in China, no different than Russia. It's just very overt, and a handful of oligarchs get the cash in Russia, where the political system is basically gets it all in China. And that's all I got to say about that. We're going to go to our first question of the day, which is, does the NDX have a double repo confirmation? And we will take a look. Take a look at the old NASDAQ 100. And the answer is no. You can look at that fairly quickly. In fact, let's go to this. Let's go to the 9-day moving average so we get something that's a little clearer. You would have to close a little bit more down than here for what we have today in the NDX 100. Let me zoom in on this so we see a little bit better what you have. You have a lot of the qualifications, but a lot of times this is a lot messier. You can see it a lot better, but really, since the 11th of March, you've been on an upswing. You want to be looking for 10 to 15 days. You had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Then you had about 4 days, and this is how it works. You pop back above it. You had about 4 or 5 days. Now, what you need is a close below that 9-day moving average, or a lot of times you want to do the 3-day moving average. The problem with this one is it's a little bumpier out here. It's not as clean, but my guess is that you would probably want on this one to use the traditional 9-day moving average and get a close below it, maybe back into this gap that occurred on the 13th. So we are close, but no cigar. A great deal of the stocks have already made and confirmed that pattern over the last day or so or two. And I suspect that we could go into next Wednesday before we see this market truly see some additional downside in the market. So, now that we got the little pullback today, it's probably setting up some of these stocks, the ones that haven't already confirmed with a repo, to get one. And again, any weakness from here on out without a big sign of strength is a very problematic market that could crack open wide, as we've seen with other stocks. Let's get into the movers of today. And of course, we talked about AMD. I wasn't really sure that they had anything of value. Well, they did. Where's my AMD? Come on, AMD. There you are. AMD did, in fact, have some juice in it with 100 million shares here today. Broke through the $3.06. Processor sales were horrible. But guess what? What wasn't horrible? Well, it was the part of their business that you really don't think of very much, and that is graphic processor business. They were able to sell a great deal of stuff in China, but at the point of giving a lot away of their intellectual property rights. So why they made a little bit of cash here? Basically, they've sold themselves into slavery going forward, and pretty much given the keys for China to get into the graphics processor business, which is a long-term negative for AMD, as soon as they sucked them dry of any intellectual property, this company was probably totally toast. But for the most part, they were able to run a lot of shorts today, and that's all that matters. We'll get into the big hitters. We'll get into CAT, Microsoft, Google, Alphabet when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we are back from the break, we had a email, and you can email me too, like Dan in Clearwater, not Lutz. Dan asks, can you look at HIG, which is Hartford? And we certainly can. You can give me a call at 877-927-6648, or you can actually email me at path@tfnn.com or post a message in the den. But not quite there yet with some of these others. Okay. When you were talking about double repo patterns, this truly is one. You got the confirmation yesterday. It came down. It had higher volume. This thing broke apart the 12th of September and went above the 9-day, went about a little bit below, a little bit above. But yesterday was the confirmation, and he closed below that line, and you could have pulled the trigger short. What you want to do is see exactly what we had here, which is you had one day that had any kind of thought of sign of strength, and actually that was a day when this thing went kind of sideways. There was no big sign of strength, no big candle, nothing, just a lot of volume in those days, and then it just kind of went sideways. But that's kind of how these things go back off the right side, and a very good example of a double repo pattern. This one, because it's a financial services group, probably won't blow apart, but does open up the move back to this gap at 39. You've got one day where this thing did gap up, but it was only on about 3 million shares. So, yesterday we were down on 3.8. So, yeah, I think you've got a nice range of about $5 in this stock. You've got a double repo pattern that looks good, and confirmation as of yesterday. So I'm not big for chasing $5 in a $40 stock. I want 10. I want something like 10 or 15. But yeah, it's a good trade. If you could get anything, basically what you want to do is try to get it close to the line, and then just decide that any move above that line again is, of course, your stop out until it starts really decaying and falling apart. But interesting nonetheless. Stocks of interest, of course, we'll get to the other biggies today. You do have some confirmations on these. Everybody's pretty worried about Facebook. And again, a fairly decent pattern out here that's confirming lower prices in Facebook. This started going above the 9-day moving average on the 11th of March, and basically continued until the 1st of April. It's been underneath it for a handful of days, went back up, tried to get higher, did so on basically vapor volume for those 3 days before. It is now closing below that, and that would set up a move to where this started from, which would be about 101. So about $10 in Facebook. That answers most my email questions so far today. Again, you can email me at path@tfnn.com. And we're going to get to Caterpillar. Of course, they had some news out. Not horrible, but it certainly did not go higher. I thought that this had pretty much finished going higher because of Ingersoll Rand's chart. We talked about that on Wednesday. A little bit more volume out here. Everybody on Wall Street still pushing the stock rather hard, but there's nothing new in that. Let's take a look at its brethren, John Deere. John Deere is just a little doji out there. Now, when we get into some of the other ones like Google and Microsoft, we see the cliff dive. And here it is. Unfortunately, these things have been above its 90 moving average for so long that when they do fall apart, they fall apart rather big. A lot of volume. We're going to have more volume, in fact, than some of the big volume down days that we had on the 2nd and 3rd of February in Alphabet. But pretty much now you've got it. So a nice big trading range, most likely to this gap that starts at about 665 at a previous low down here on February 8th to 663. Of course, when you look at what they were doing, it had all to do with them saying that the average revenue was down about 9% per click, and that's all she wrote. This thing was headed lower. Microsoft dropped the chalupa today also. We'll go ahead and give them the losing horn here. Yeah, what else can you say about it? No horn. I forgot. None of this works. We'll have to fix it over the weekend. Anyway, down with the losing horn. I heard it. That's all that matters. It had me. Was this move right to the gap up? That gap happened on the 11th of March with 32 million shares. And of course, today in it, we're blowing that all away. This sets up the $48.19 low from February 8th. So maybe another $3 down. I could see it. I could see it down there. Anyway, what else do we have out here? On Microsoft, it was all about slowing PC sales. I'm actually writing about it for the Tech Insider right now. I've been going through a lot of the earnings calls from last night, so I'm kind of tired. I'm looking forward to the weekend and getting to the weekend. But it continues to be rather problematic in that I'll just give you the Reader's Digest version. It looks to me like Microsoft will not have a good news until back-to-school PC sales in late August. It will be a long, hot summer for PC sales. The reasons why, in the Tech Insider, you can check that out. Go to the front page of TFNN and look under Investing Newsletters. What else did we have out here? Starbucks, not so bucky today, and down on big volume. So far, 22 million shares. The last major low came with 21 million shares, and that was some fairly decent volume. 24 million shares back here also. So anyway, a lot of volume, a lot of energy. I don't know what else you can say about it other than the fact that our conversation on Wednesday, where I brought up how these PEs were absolutely at monster long-term highs. And the thought that people are going to start really paying up for these only means one thing, and that is that you think that the market's going into a bubble. Either these people are going to have significantly higher earnings or they're going to fail. And in the case of last night and this morning, we saw a lot more failure. McDonald's came out, it looked rather flat. It's not in my list, MCD. It kind of sold off a little bit here today. I watched it earlier today. You know, good sales, but really what they were doing is comparing this to a year ago. And of course, after it opened, it was a little weaker. Not a lot going on out here. But again, you've got pretty much what you want in this thing to figure that a top is in. Am I thinking this thing could come back to probably somewhere around the 120 range? Not any pop. So back, we'll look at a few more of these movers from last night, including Sam Adams and cereal malt beverages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And I have to do a little bit of a retraction from earlier. I didn't notice that I was missing the data for today in the IndiX. And yes, that would be a confirmed double repo pattern. I just didn't look up there to see that we had the data for the 22nd. And I'll have to find out why later. We will go to Ultra, ULTA. And what do you see in this? Vin from Boston asks this. And, well, you know, you got the possibility of filling these two gaps below. But you also have probably one more gap in this. You've got a significant gap back on the 11th. You've got the gap out here on the 8th. And much like a couple of years ago where I said, I'm trying to remember the stock, but maybe it was I think it was Netflix. Maybe been another one, but I said, man, if it gaps up one more time, all you need to do is just the most bearish thing in the world would be to get one more gap in this thing, and that would be it. And let's see what the date on earnings is on this, because we'll get it real quick here. May 26th. Yeah, I would say that you're probably too close to earnings. This is the Momo of all Momo stocks as of late. It makes tech stocks look poor for the greatest amount of time. But you certainly want to look at that ULTA, one more gap higher, and pull the trigger. You've got the basis of a fairly decent gap right here. 1, 2, one more, and that would be it. What else do we have out here? Okay. What do we got? Oh, I'm covering something up here. Oh, need to go back to my movers. Okay, we got Google. We talked about Cat. Did we didn't talk about cereal malt beverages, did we? Did we talk about that? Where's in my list of stuff? Let's take a look at one that was actually a winner here, and that was Skechers. Skechers now popped up a little bit of volume, but it's really going into this down day on the 23rd of October that had almost 37 million shares. You're just going into it with 8 million shares today. So that, again, is a problematic and not a thing that you want to be looking at too far into. But, yeah, that's probably pretty much it. You just want to say, hey, problematic at best to look at this. And I don't know. That's about it. Yeah, you get 5.6 million shares back on December 2nd. But this is just in a lower trading range. Energy from the lows, not all that exciting. Earnings were better than expected, and I think there were a lot of shorts in this stock thinking it was going to go much lower. Oh, we were talking about Sam's. Did we talk about it already? Oh, no, we did not. It's a sad day for many on Wall Street because, of course, the Boston Beer Company is down, and it's down on volume. Always a sad day. They make so many wonderful things that make so many people happy, including me. The last major low was down here on 230,000 shares on January 20th. We skipped it already with 710,000 shares. Let's go back and look just how far they punished this wonderful company, making the delights of all kinds of people. You know, you got 3 gaps down here. I don't know how bad things could be in beer land. I don't think they could be here. But what you do have, of course, is a nice gap that has not been filled that runs from about 105, 107, something like that, up to about 130. That gap goes back to a high volume breakout, and that is the 13th of December, 2012, with tons and tons of volume, 900,000 shares on that day, and that's probably where this thing is making its way to now. Energy wasn't very strong on this leg down, but now that you've broken it, and you've broken it with volume, you got a couple of days. You got, we're basically at this one right now, this low that popped down on the 2nd of May in 2013. That had 614,000 shares, but we're already through that. So I think that opens that up. That gap right there on 12/13 of 2012 would probably be the next support level. What else do we have? Maxim Integrated Products. This one is going up and filling its gap. This thing gapped down on the 4th of January with 3.2 million shares. Again, not a very good day to be pushing with light volume. 2.4 million shares. It'll be lucky to get into that with the 3.3 million shares. Energy has been kind of lackluster, pretty much like the entire market on the way back up. Rig, Ocean, a little bit of juice in this one earlier, but went nowhere. So we did Skechers. Let's do Schlumberger. Schlumberger, open lower, trying to recover some here. We talked about this one where it had basically gone into the previous high, but had not pierced it. Maybe it still gets there. The energy was a little off from the legs down, but I would neither be a bull or a bear in that one. It could flip either way. Visa, of course, another one that dropped the chalupa last night. On this one, down. Volume has picked up a little bit more than the last 2-3 weeks. See if you've got anything else out here. You got a little gap that goes to March 30th. And the close of the day, what was that? The low is about 75.84. So, that's probably, that's the gap up. You also have a couple of times where this thing pretty much petered out right around that $74 level. So Visa could easily come back to those levels. Let's take a good look at the IYF. Also, several of these ETFs were looking rather weak. This one on the energy on the way back up certainly did. It has not gone and hit anything other than this congestion zone over on the left-hand side of this big V. If we go back to, let's just call this mid-December through the end of January, the end of February, where this thing really started to come down. Down with a ton of energy. Let's zoom into this just a little bit, because this is pretty much just to look at the very light volume that we've had since really the 17th of March out here in the IYF. It continued going up, but there just wasn't a great deal of juice. And that would be kind of it. Anyway, we're going to go to break. We'll be back in a minute. I'll try to get that NDX chart up and running between now and then.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
The stocks that have been on a tear up here and see what they're doing today. This is kind of what I'm looking at, which is a lot of these stocks that are just a little bit in a trend. ABVY, this thing has been on a tear since the low back on February 12th. Not a lot of signal yet. This is the ones that I suspect that we need to have a little bit of dip in and then a pop back, and then that will set the total hook on some of these other ones out here. Abbott Laboratories, still, you can draw a fairly decent, distinct line on the way up. ACAD, this one looks like very interesting in that it got back up to this gap of the 6th of January and has done nothing but go sideways for a while. Acor, you know, it's been on a nice ride up, pretty much $5 on a straight line. No real problems yet, just very light volume in some of these that continue to go up. And what was to take a look? We're flat on the day now. Now, of course, a lot of these stocks that are showing some weakness today, of course, on that strong dollar. If you missed it, dollar's up almost 50 cents at 95.09 right now. And I don't know if anybody said anything to anybody about why there was a stronger dollar today, but it certainly looked to me like when I was looking at the news this morning, a great deal of the polls over in the UK say that it was about 55-45 before for the polls on whether or not they were going to leave the EU. It's starting to look a lot more like 60-40 that they will leave the EU. And I think some of that kind of filtered into the dollar, along with Draghi's comments from yesterday and the follow-up from yesterday. It looks problematic at best. Anyway, if we take a look at the 9-day on some of these, including First Majestic Silver, they're still way over it. So they haven't made a signal yet, but they are coming down to it. The question is, do you get a bounce off that, a very light bounce after this little downtrend, and then you make some kind of big signal for the downside? That's what you want to watch for. Let's see what else out here. AMN Healthcare, no big signal out here today, still above its 9-day moving average, and it has been since what, the 16th of February. So a lot of these stocks, I'm still thinking that we're going to see some kind of break in the trend before the entire market falls apart, and I'm waiting for a few more of these. AMAG Pharmaceuticals, another one that has been going up, in this case since the 29th of March. Amgen, of course, the little engine that could, is now back up to its highs, but on much, much lighter volume. You got it $165 in October 29th. With 4.8 million shares, 5.3 million shares. When we look at the December 16th high, we are running into those candles today with 1.5 million shares, and even yesterday, 2.4 million shares. Not a lot of juice. That's where these things are going to start setting up. And, you know, it's not just them. Bristol-Myers Squibb, this thing has been running since the 28th of March. A little bit better today, but again, you have to look at the extremely light volume out here today. In fact, the last 3 days of declining volume as you've gotten up to this. So you can have a pullback, maybe a little push higher, and then you get it. So I could see Wednesday, a week from Wednesday, next 8-10 days are going to be very important in this market. My guess is that you want to be on your A game. In the meantime, sell when you can, not when you have to. We'll see you Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.